Now in this video I'm going to be showing you guys how you can identify high probability forex patterns and how you can trade them. So right here I'm going to be depositing in $50 right into my Vantage Market account, so when I see this point I can trade them. Now why $50, you may ask? Now studies have shown that beginner traders are more likely to start out small. So I'm going to be trading, but I'm only going to be placing a trade in the setups I recognize. So right here I'm going to be depositing in 50 exactly. So right there I've already gotten the $50 into my trading account. So right there, let's go ahead and look for pairs that we can trade.
1 hour later.
Now right here I'm looking forward to trade Euro USD, and I have two moving averages here. I have the 9 moving average and I have the 25 moving average. This one is actually the 25 and this one is the 9 moving average. Now whenever I see price below this moving average, it's trying to signify a sell in the market, and whenever I see price above this moving average, is trying to signify a buy in the market. Now I'm using this alongside with a forex pattern. Now if you know how a trend forms, it forms like push phase, retracement, push phase, retracement. So this is exactly what is going to happen here. Now the only thing that is remaining here is to see like a healthy red candlestick. So if I see like a healthy red candlestick, I might just go ahead and take this trade. Now this trade has a long way to go. I'm going to show you guys. But before that, I think let me just go ahead and place in this particular one. I'm going to place in 0.1, and because I see it's already starting to start, so I'll just go ahead and place 0.1, except we have to place that again. So where we're going to be keeping our stop loss is at least 2 pips away from the market. So I'm going to be keeping my TPs around here, because this is like the next support in the market. So this trade is big. Just imagine how small my stop loss is and this point right here. So remember the pattern I'm using right here: push phase and retracement phase.
1 eternity later.
So not bad, we're already making $5.80. So if I show you guys, it's just starting to go down, but there are still other pairs. Like if I show you guys GBP/USD, I'm taking this GBP/USD on the $3 challenge. So I just found out that okay, let me just take something different. And I also sent this let me show you guys how that one is doing. So as you can see, sent the GBP/USD out on Telegram group. So in order to take something different, I took Euro USD. So
A few inches later.
look at the pair that we took from this point and look how where the market is now. We are making $17 from 50 for 50.
A few moments later.
So as you guys can see right now, up 20, and yeah. So as you can see right now, we're heavy on this, heavy on this. So yeah, I later ended up closing my trade because I figured out the market will be going up soon, so I had to secure the profit I have. Now I'm going to be explaining some other forex pattern, which is double top, double bottom, triple top, and head and shoulders. Now these different patterns also change the direction of the market. Like let's say the double bottom, it changes the market to an uptrend. Then if you see something like the head and shoulder, this is something that usually happens whenever the market is going in a downtrend, and double top is the type of forex pattern that occurs when the market is going in a downtrend. Now this right here is GBP/USD on the daily time frame. Now if you could notice something here, what type of pattern is happening in this point of the market? The type of pattern that is occurring here is the double bottom type of pattern. This is the point where the market touches a particular support zone, goes up and touches that same support zone again, and before it starts going in an uptrend. If you see something like this happening in the market, this is trying to signify that the market is ready to go for a heavy bull run. Now take a look at this one right here. Now what pattern is in this part of the market? Now this is a double top in the market. Now when a double top happens in the market is when there's actually a resistance that the market come in contact with twice before it starts changing directions. Now the first question might be like, how are you able to recognize that okay, this point is a point of support or this point is a point of resistance? Now if I try to squeeze this point in the market, you could notice that the market has been having some reactions within this area. Now I've already added in the moving averages. Now once you notice this type of thing happening, you know, the market is hitting a resistance, price hitting a particular resistance twice, and start to see price, you know, getting below the 9 moving average, if you're in a buy, you can go ahead and close those positions to be on the safer side. Before you go ahead and take a sell, you need to wait for price to get below this blue moving average, which is the 25. And as you can see right here, it actually had a free fall. Now best what you can do is to use this moving average to get that to trade with those patterns.